cat. Hey, y'all, how we doing today? Today is, big yawnies. Today is June 1st. It's a Tuesday, 2021. If you're new here, congratulations. You're obviously a man or a woman of culture who enjoys anti-clickbaits and memes. So that's it's pretty fucking sick. Welcome. If you're a veteran here and you've been around a few times, happy to have you guys back. My name's Evan. This is Fifth Third Trading. We do watchlist shows Sunday through Thursday, review shows on Friday, and sector rotation views on Saturday. This is my cat Gremlin. He's a good boy. If you're new, what you're in store for is about 30-35 minutes of actual technical analysis and due diligence. We're going to talk all about supports, resistances, trend lines, patterns, volume profile, EMA lines, stochastic vortex, and RSI. These 9 things plus magic make it 10. Boom. Build up my technical analysis. Now again, I'm a huge believer in that you should have a structure, and my structure that I have is risk management, all 3 fundamental analyses, mental analysis and technical analysis, macro index trends, having a proper trading plan, goal setting, all brought together by consistency, which probably sounds confusing, and if it is, welcome, stay. I'm gonna teach you how to use all these things. If you're a person you're watching is not telling you all about goal setting properly, how to be consistent in the market, how to even do a trading plan, why are you watching them? You got me now. What's up, baby? Otherwise, if you're new, of course, subscribe, like, hit the bell notification, comment your favorite, I don't know. What's your favorite Pokemon? All right, there it is. Nerds, what's your favorite Pokemon? Comment down below. I'll argue with anybody about anything. I'll name the dumbest Pokemon and win an argument. Comment that. I don't even care. Let's go, nerd. If you also really enjoy this kind of content, you enjoy a 29-year-old guy having his midlife crisis with obvious tan lines. Look at that. It's like it's so gross. If you enjoy this kind of content, you want to have newsletters every morning and night, have someone tell you macro market moves, have a great community, check out the Discord. It is 6/1, so you'd have 30 days to enjoy it without being charged until July 1st. So that's really cool. Check it out. Add me down below in the description box down below. Just hit me up on Discord, EvanMPressman, $4698. Copy and paste it from below. Hit me up. I'll probably message you back way too quickly and be like, what's up, bud? How are you? And then I'll get you guys added. Check it out for 7 days for free. Come check it out for us. No big deal. Lastly, and I always say this in every episode because it's true, if you enjoy my content, fantastic. Please watch. But again, there's so many other people out there who are really good too. Rainer Tao's great. All the books, Mark Douglas books I've read, all the Robert Kiyosaki books that I've read, all these kinds of things that I've read, the Millionaire Next Door, whatever it is, go patron them, go support them. It's not about being the only person in the community who's the best, which I mean for swing trading, of course. But if you'd like day trading, scalping, long-term investments in crypto, which everyone should be getting involved in and having a balanced portfolio, I'm not that guy. So again, please go watch some other folks, go patron them, go support them, go share their stuff, and make this a community of learning and quality, not just clickbait nonsense. If you like clickbait, get the hell out. I don't do that. We do dubs and winners every day. Check my Twitter. Always tweeting out nonsense. We kill it here. Welcome. Otherwise, 7 great stocks today. Let's get into it, boys and girls. Let's do it. So as I was saying, we have 7 great tickers today for you. I've called a few of these before, and again, it's beautiful when they come right down into value, and a few I have not. So with no further ado, let's get into it. Our first one's AMGN. We've called one before. You're probably thinking, where's the charting? I know you're not thinking that, but again, that's show business, baby. We have our supports and resistances first. Of course, our supports are going to be white solid lines. I'm going to go with right about here. That's a good one for me. Our resistances should be probably right about somewhere probably in this area. I'd say probably right about, yeah, be a little bit fair. Let's go with more recent price action, a little bit lower. I'm going to fill that gap right there. And again, the main reason that I put these where I put them, my supports and resistances, are channels. I talked about this before in my classes and other videos, but again, just to clarify, a support and resistance should have 100% movement from support to resistance and resistance to support. That's how you draw supports and resistance properly. If you have a lot of movements that are not 100% moves, you're going to have a problem, and I'll show you this. So with AMGN, that's the one problem here. Besides that, full move down basically, full move up, full move down, full move up, full move down, up, down, up, down, up, down. You can see very often, besides right here too. This has been 100% moves. And again, it's not perfect, but again, if your support resistances don't bow to have 100% moves, they're not proper channels, and that's why some folks mess up the easy stuff. But again, that's what I'm looking for. Our trend line, my head may be in the way of this video. We can see this right here. I'll put it right about there. You're probably thinking that's not even close. Why are you putting this? Well, I'm not necessarily watching this line in particular. I am watching this line though. If we move this up, we can see that right about here, we have quite a lot of action that bounces in this area. There, and it's right about there. So again, I'm gonna put me a nice little dotted one so I know that this is a trend line that's lived once, twice, 3, 4 times now. Again, I'll move up just a little bit more to make sure it hits everything, or I won't. Right there, look at that. Once, twice, 3 times, same exact trajectory, it's just a bit higher. So again, we have convergence, it's just not perfect in the way you want to see it, but again, it's very much there. Our volume profile, we're going to throw on our 70% volume area. Again, we can have a whole entire conversation about volume profile. You should definitely check out my video on it if you want to have further information. This is where 70% of the action or the volume is going to happen, and then this is the POC. It's twofold. If you're below the POC, the good news is it's gravitational. It wants to pull you higher, but the bad news is it is going to be a strong resistance. So again, this wants to pull us higher. It does. But to get above it is going to be kind of a B word. When you're above it, the pro is it's a strong support and keeps you up there. The bad news is it wants to pull you down. A quick lesson, this is a capital D. The best spot to buy in a capital D is the bottom. So again, a perfect buy-in will be about 223, 222. If this does dip down to about 220, that'll be perfect. High volume node right there. Lines up perfectly with supports here. This will be your best buy-in spot if it doesn't reverse before then. If that sounds confusing, check out my video. But the last thing we do for AMGN, this is perfect minus MINUS. I'm good at spelling. AMGN, we put the little boy on there, we put the little text so I know what I'm talking about and I don't get confused. So this is a great setup. I like it a lot. No true great looking resistance line. What I do see is a possible ascending triangle though. We can see a nice move here. It comes back down. A nice move back up to that area. Comes back down. Same exact area. Comes down. So again, what we're looking for here is not necessarily a perfect buy-in on the trend line, but higher lows. Higher low, higher low, higher low, higher low. So what we're looking for here, now that we've established a lower high, is that we want to find a higher low. If we do lose 230 or 231, I guess we lose this tomorrow, again, that breaks down. Don't freak out. Again, your buy-in should then possibly be near 228, and then if that does give out, you want to go in probably for 220. If this all breaks down, we're coming back down here. But again, you know, you had a higher low, then we had a lower high over here. Then again, it came through just fine. So AMGN, the play for right now, you know, you could probably risk 3%, 2.5% right here and be just fine. A full move down here, 11%. Not saying it's going to happen, but if you were to buy in, let's just say at the support line, you know, a full move to the POC, 6%, you're risking 2. It's 3-1. A full move to this, 5-1. You'll take those kinds of odds. AMGN, I like it a lot. Let's check the indicators. What's super cool about this channel, besides me and my cat, he's a good boy. Besides that, Chef Boy or Swing in the house, is that I don't check indicators. While I'm scanning, they're all turned off. 10, 50, 200 EMA lines are turned off, RSI is off, stochastic and vortex are all turned off. Some folks like to scan for crossovers on the EMA lines. That's great. Some folks like bounces. That's great. I don't turn those on. If their price action doesn't look good, I don't care about anything else, right? It starts technical analysis, indicators, fundamental analysis, I reinforce with mental analysis, and then I move into my spots. And again, that may sound confusing. The class is coming. So that being said, let's check the indicators for this stock right here. So off the bat, we can see that it likes to go beneath the 200 to show value. It has a hard time breaking back above it. It does take a while. Sometimes it takes a month. Sometimes it takes a week. Again, so we're down here having some problems. You may be in for the long haul. Sometimes it's very quick. Sometimes it's not. What you should know is that on the short-term price target, short term, not long term, but short term, the price target must be based off the 50 and 200 EMA lines to be accurate. You can see how hard it is to break above the 50 and the 200, and when it gets above it, it bounces off the 50. If your price target's going to be like, oh, 255 easy. No. Short term, not really. Long term, sure, but short term, no. It must be based off these EMA lines. So again, I think 4 to 5% on a short term swing in a few days is logical. If you break above that, hold on, fella, because above the 200 and the 50 on this time frame is when you get the biggest moves. You want to set a crossover alert, do that, And again, waiting for a crossover is fine on the long term, but again, this is a great value. RSI almost at 30, it's at 32, 2 more pips down, it looks good. Just to check, oversold over here, would have printed over here, would have been faked out, would have printed, would have made short-term gains, would have been faked out, would have made money, would have made money. So again, it's pretty good odds right here. I like that a lot. Stochastics almost negative 40. You want to see it start to curl north. If it does start to curl north sooner than later, you'll have a very obvious divergence develop if it does reverse soon. But again, that's a if situation. Obviously, no bullish or bearish divergences. It's all lower highs, lower highs. That looks good to me. Bulls low, bears high. AMGN checks out. The only issue is this is falling. You got to do the fundamental analysis on why it's falling and figure out what's going on. If it checks out that it's probably just a short-term correction and it's a little bit of overreaction, that's good. Let it show some life. Otherwise, AMGN, watch list it. I do like it a lot. Next is CAH, Cardinal Health. I've called them before. I actually called them right about over here, I believe, and it did really well. I also called it over here. It did really well. Again, will it happen again? We shall see. We have obvious lower highs in the not main term, but in the midterm. Right now, it looks like it's lower highs. Lower high, lower high, lower high. That's been established, but again, higher low, possible higher low over here. So we're going to see. Again, what's the risk here? It breaks everything. All right, 2%, you get out. Again, if you like to have a support play, if your support line is a little bit lower, like yours is probably closer to like here for say, if it does come down to here, that's not a bad play at all because again, the risk here is minimal, right? 2 or 3%, it's all broken. You just get out. It's totally fine. The reward here, first resistance, 2%, so it's a 1 to 2 play even off the first move here. If it does break any higher, this is a good resistance, 3.5%, easily 5 and some change. Up here, 7. Again, there's plenty of room to run up. The trend line is here. The support is here. The POC is above, trying to pull you higher. So again, worst case, hopefully you get up to about 2%. Put a stop loss that you're buying, break even, worst case. A possible earnings overreaction. It looks really good. Easy trend line, supports here. It's good convergence. Let's check out these indicators real quick. So off the bat, we can see once again, it breaks the 200 to show a good value. To get back over it is a different issue. So again, it likes to hit the 50 and die, hit the 50 and die. Your short-term price target may only be 3 or 4%. That's not a lot, but again, that's your worst case scenario. It's not too bad. If it does move up 2 or 3%, it starts to die off again, take your profit and wait for this to come down farther. Again, you're gonna have your biggest moves and your best moves when your price is above the 50 and the 200. When price is properly stacked, or it's price, 10 EMA line, 50, 200 on the price target and all that kind of stuff lines up, you'll have the biggest moves for sure. We can even see properly stacked price 10, 50, 200, big move. Price gets stacked up 10, 50, 50, or sorry, price 10, 50, 200, big move. So again, we can get above both these and you can hold, you're gonna be in for a good time most likely. RSI, it's low. It could be a bit lower, but again, it reverses here. That's a great sign. No bearish divergences. That looks fine. It's not negative 40 yet or curling north. It doesn't have any life yet. So again, you may want to wait a day or two to show some life here. Once it starts to show some life and curl north or get down below negative 40, we'll be good to go. Bulls, dummy low where you want them. Bears, dummy high where you want them. CAH, again, checks out. Great convergence. POC should pull us higher. If and only if we can break the 50 and 200 EMA lines, will be a fantastic run. It could be a few weeks, could be a few months, it could be tomorrow. But until we do that, make sure your price targets are limited below those or near those EMA lines. Otherwise, CAH, a great pickup to watch. Next is DBI. This is the first one with possibly easy to read resistance trend lines. CAH, there isn't any. None of these really, there's not really any three that match up perfectly that well at all. AMGN is the same exact way. It's a horizontal triangle or possibly a ascending triangle. DBI is different. DBI does in fact have what seems to be easy to read resistance trend lines. Again, come from here and come all the way over. We can see a very clear one like that. Again, I don't love making my trends from the swing highs that don't match up with the swing lows. This is my swing low. I want to come from here or from here. But again, even from here, we can see it's clear. Okay, that's a great one. And again, if that's a new tip for you, welcome to a real channel who helps people and doesn't push bullshit. If you're going to make a trend line, I start with the support trend line. The resistance trend lines should come from the swing high, either direction of that move. If not, it's not invalid, but it's not as valid. And again, as we can see once, twice, 3, 4, 5 times, it's obviously becoming a rising wedge. It's going up, right? So again, with a resistance trend line, I make mine orange. We can see beautifully, this is setting up to be a gorgeous play right here. A nice uptrend, looks really good. Our max profit, 23%. Only 23%. Only Michael Jordan and LeBron James numbers here. Not bad at all. So this does make a full move. Not saying it will, but if it does make a full move, 20% could be in the upper echelons of what we want to see here. Now again, lower high established. A higher low has been established for a double bottom here. That's beautiful. Your risk is a bit higher, 4 or 5%. Comfortably needs to be risked here to make a move. It is an earnings play. I was on the fence of adding it because I don't like earnings plays. But again, with the support trend line, with the support there, with the resistance being not so strong and this being a nice wedge up, I decided to keep it on here. DBI, you must do fundamentals on what's happening here. Again, negative 26, negative 53, 12. It's always doing something right on dividends and being a little bit higher. Super nice support area, super clear risk, super clear reward. I like it a lot. Let's check these indicators out. Ooh, so this is great. This is a really good one. So again, we're going to talk basically off of the EMA lines exclusively. We're in no man's land. What do I mean? So we're above the 200 but below the 50. So again, I don't think the 200 is really all that important. Let's check it out real quick. I don't think we're all that important with the 200. So you can see it doesn't really mean anything here. So we're going to go off of the support area, this trend area, and this 50. So what I'm looking at here is exclusively this. We are above the trend line that I want to be in. We're about 25 cents too high, and we're below the 50 EMA line. So now you have options. I go off of the convergence style that I've developed. It's my own one. No one else does what I do. If they do, they stole it from me. And give me it back, loser. No, it's okay. So where we are right now, you have two options, and you must decide this. This is how you properly trade and manage risk. Have two plans ready. If you really like DBI, that is. Hypothetically, not advice. DBI drops 25 cents. We're now at value, as we can see. It drops 25 cents to this area. We're now at value. When you're at value, you must decide, do I go 100% in right here, or do I scale in? Maybe like a half of my, let's say I put $1,000 in, put $500 here. If it breaks back above the golden trend line, let's say it does one of these, it comes down, put $500 in, it breaks above, other $500 here. I've now averaged out to about $755. That's a good entry. That's fine. If it dips down farther, like let's say we put money in here and then dips down the bottom of the trend line here, we can put more money in down here and here, averaging out to about 725. If it breaks down farther, we again managed our risk. That's a fine strategy. That's going to be off of value and off of going lower. The second strategy you can do here, in my opinion, is a crossover. We have the 10 here. I'm not the biggest, across the 10, I'm good. I'm much more of a cross the 50 kind of guy. Now it's going to be a 3% give up. You're giving up 3%. Oh boy. Giving up 3% and you're near resistance, but again, you want to cross back over. Historically, we're above the 200, the 50, the 10, and then price. You want to wait for a crossover and get properly stacked. That's fine too. If that's a lot of information that's confusing to you, subscribe, like, comment, because again, you're in the right spot. RSI, it could be a bit lower. It's fine here. It reverses plenty right where it is now, so that's a good sign. Negative 40 on the stochastic looks really good. No clear divergences right now, but again, it's negative 40 and it's starting to curl back above the red. That's a good sign. It breaks above that negative 40 and shows some life. We're in the money, big fella. Bulls are low, could be a little bit lower. Bears are high, could be a bit higher. DBI, designer branding. Do your research, do your fundamentals. We're risking more than usual, but again, if this uptrend, and we're going off the preconceived notion that this price action will hold, if this does hold, you have a great support, a great trend line, and we're clearly pushing above the POC. We clearly have something that people want up here. It's a good look. Watchlist it, see what it does. Next is DIN. DIN is also like DBI. We have a clear possible resistance trend line. So let's go through this again. If we're going to go from the swing low, we have to go from this swing high or this swing high. Does this line up? Yeah, it's okay. The only issue is with this kind of system that we're doing here, we are kind of forcing it to kind of hit previous price action. Like, oh, well, over here, it would have been a wedge up. See that? You would be like, oh, well, actually, this time it would have been a wedge up. That's fine. So again, the resistance trend line is a bit muddied up, and that's okay. I'm going to go from this right here and come up. And I can see plenty of price action. Plenty of price action hits this right here. Looks really good. Resistance trend line. Let's activate it. Is it the same exact angle? It's not. It's a bit off, okay? So again, we're not going to call this a channel up. Now, for all intents and purposes, can it be a channel up? Sure. But again, we're going to be accurate traders off technical analysis alone. that must be taken into consideration. Again, these three don't line up perfectly either, so it's not a triangle quite yet. But again, right here, what's the risk here? Let's look. It's a little bit high, but again, you're risking at most, 90, 30 be a good stop loss for me, 3%. If I really like it, I would probably risk about 89, 4.5%. That's not terrible at all. And again, if you scale in, put $500 in now, theoretically, it breaks out tomorrow, another $500, again, you're right here. That's fine. If it does put $500 here, then it crashes down farther, $500 down here, you're averaging about 91, 91, you're good. Looks pretty good. And again, look at this. Higher low, higher low, higher low, higher low, higher low. So we have a green day tomorrow. Hopefully push higher. We don't have higher low or higher highs yet, but we do break above this. Boom, into the races we go. Bada bump, ESPN shit. We're off to the races. Should be good. Get yourself a mint julep because this horse is running. Sick reference. Oh my god. Kentucky Derby jokes. Love it. So again, great looking place right here. Really nice support, nice trend line. Let's check the indicator and see what's up as well. So we can see once again, just like with DBI, the 50 is giving us some great indications. Again, when you're above the 10, 50, 200 properly stacked, you have the biggest runs. We have a really good sign here that the 50 is right above us. You want to wait for a crossover, baby? Give up the 2%. And again, wait for the candle to stop. So the 4-hour chart, it must go above it and hold. If it breaks above and comes back down, it doesn't count. If this does go above the 50 and holds, that's again a great sign. Again, if you do that, you must put your stop loss probably around like 93.15, 92.66, and again, get out and then you can buy back in if you need to. But again, that's a fine play, or again, find your definition value. Both are great entry and great ways to enter a stock, in my opinion. RSI could be a bit lower, but again, it spends more time than not north of where it is, so it's a good sign. It's a bit overbought. That's probably because this is a lower volume sell-off, and it's still coming down a little bit. So that's why I'm saying, if you want to scale in, give it a day. If it does come down to like 91.70, 90.99, that'd be great. And then you can put some money in here. It drops down to this support area down here. Load up again. You're averaging out about here. It keeps going down. The 200 is going to be your stop loss. You go from there. And again, it's all about playing 20 questions basically. Bulls are meh. Bears are meh. It's uptrending. So again, you're going to have to give up some shit to get some shit. If we're uptrending beautifully, if it's a great wedge up, and you don't have the best stochastic RSI, that's fine. Again, weigh the pros and cons thereof, whatever indicators like the most. But again, the price action alone is really good. DIN, not perfect with these, but again, a great watch list item nonetheless. So if anyone watches my Saturday videos, which you should, as I scratch my leg, oh, it feels good, you'll know that technology and comm services are going to be a focus this week. I'm not the highest on them long term. I think they're a terrible long-term investment until I see data otherwise. And again, I'm an adult. I know I'm wrong sometimes. And again, until I see evidence of them turn around long term, I'm not wrong. I've been right this whole time. I think they're good short term for now, but until I see higher highs consistently and higher lows consistently, not sold quite yet. FOXA is a great, if I believe so, comm services stock. And again, this is a beautiful uptrend. This is a beautiful, look at this. This is why I do resistance trend lines the way I do them. It's basically perfect. If we zoom in here, these are basically once, twice, 3 times. That's valid. That's valid. Once, twice, 3, 4, 5, 6. Any one of you idiots, any one of me idiots can make a trend line off of 2 spots. You can be preemptive with it. But until there's 3 spots, in my book, it's not a trend line. So this is a really good looking trend line. Extend left. You can see it's close. It's close, but it's not perfect. A nice horizontal triangle is forming here. Great support area. You've had across the board. Higher low, higher low, higher low, higher low, higher low, higher low. It's showing life. It's doing what you want it to do. Now again, a short-term price target of 2%, I wouldn't get out of bed for that, honestly. But again, that's your worst case. It's not that bad. If we're playing a breakout, you could probably take this right here and be like, all right, well, let's say we do break out. Most folks would be like, all right, if we do break out, we're looking at that kind of move. And again, that's, about 8%. It's not a perfect science, but again, FOXA, FOXA, given the support, divine profile line, this trend line, the breakout possibility, it has a lot going for it. Let's check these indicators. Oh shit, no edits. So what's great about this, look at the 200. You see how the 200 is independently acting and living without the trend line. That gives me hope. There's some plays where like the trend line will be with the 200 together. it kind of takes away from the convergence factor. This isn't one of them. We can see clearly now that the rain has gone. 6 song. The 200 is a great support. The trend line is a great support. The support horizontal line, traditional one, and the price right here, the volume profile, is all acting as convergence. What I'm saying is that there's going to be idiots, not you guys who are here, not dumb, who are going to buy off of the support. There's folks who are going to buy in because of the 200 EMA line. There's folks who are going to buy off of this trend line. Folks are buying because of the volume profile line. All 4 of them are going to see this shit in the next day or two. We're going to get in early. We're going to get in before volume hits, and we have the best chance of success. We're going to get in now, converge all in together, and be successful. So FOXA, again, worst case Ontario, from my trailer park boys out there, friends with the Benedicts. It does break down 2 or 3%, you get out, you lost everything, boom, you get out. It's a really good look of convergence. Also leads me to believe that the triangle is real because both EMA lines are towards the middle of it. If the EMA lines are towards the middle of a triangle, it shows consolidation. Stocks can do 3 things: ascend, descend, consolidate. We have consolidation. Ascension and descension should be coming next. Looks really good. I talk fast sometimes, I'm sorry. We have the RSI fair at best. The stock is low. This is consolidating. Again, consolidating. Looking pretty good down here. Is there a bullish or bearish divergence? Nope. This basically checks out fairly well. That checks out fairly well. Looks good. So again, at FOXA, I'm not guaranteeing a breakout. I'm also not guaranteeing breakout the right way. It could definitely go south. But again, the indicators show, the price action shows, we're kind of getting to a head here. Something's going to give. It may happen, may not happen, but FOXA, watch list it, put some alerts, could be good for you. Next is LBTYA, Liberty Global. I've played this one before on Robinhood. I don't know if Webull has this one. I think LBTYK is a very similar setup, but again, make sure it's on your platform first. I've seen this one, ironically, not on some. I don't know why. This is a really good ascending trend line. Glorious. And again, is it a little bit overdrawn? Sure, I think this is a large gap where you had almost, 120 days, 4 months, it didn't even touch. It's still valid to me. Our resistance trend line, again, is a bit muddied up. It's hard to see where it possibly would come from. There's no real, because of this bad boy right here, no real 3 hitters. Maybe like this. And again, that does line up really well. I'm not going with the resistance trend line here. I don't see any. Maybe one will develop soon, but again, the support and trend line is all that I see. We're trying to get above this volume profile line. That's going to be your first major resistance. But again, trend line looks good. Support looks good. Maybe it comes down another $1.40 or so, comes down to this area. That's fine. It's still dropping off. No signs of life yet. Look at earnings. Ran up. It's coming back down. So again, rushing in makes no sense to me. Look at the severity of these candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's 10 before I even get halfway through. These are much bigger. There's no point rushing in. All right, there's no point being like, I'm just going to time the market. Doop, 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 doop. Well, most of you guys can't even time your clocks get out of bed to trade at the right time. No offense. So again, this does a falling knife until further notice. But again, it's still a good one to watch list. I like it a lot. Let's check the indicators. Oh, look at that. It moved down on camera. Interesting. The 200 EMA has shown us some life. Value, value, value. Interesting thing to notice. Below the 200 by a lot. Not by a lot. By a little bit. Barely tapping it. So again, we're showing some good life here. We're showing over time we're getting more and more ascension and less descension over time. That's really good. It likes to break above the 50 and retap it. So again, if you do get a good push up and you get near the 50, you're probably going to consolidate sideways for some time, then take off again. If not, go above it, come back, and then take off. Again, it just pulled back farther. Not rushing in on this one, but again, the 200, that's a really good sign. RSI, low where you want it. That's great. We have a good stochastic here. No bearish divergences. No clear bullish ones quite yet. It looks okay. But negative 40. Wait for it to curl north and show some life. That blue goes over red. We're good to go. Bulls where you want them. Bears where you want them. LBTYA is a great example of a stock I may play on Thursday or Friday. Right? We had really good moves today on the indexes. They did come down. The VIX went up. The Russell then took off. See what index this is in. See what sector it's in. It may be in the financial sector, which is taking a pullback right now. If it does show some life Wednesday or Thursday, it could be good to hold over the weekend. But with that earnings play, I think it's still correcting. But overall, we may be here for 3 or 4 days. LBTYA, I like it a lot. Last one is one that I called last week's site. I don't like to call, I actually really hate calling the same one within like the same month or so because I want to give people a lot of variety. But this one, I like it. This is a fantastic trend line. This is a complete rarity to see such a great trend line. Our price target before was about 176. We called it over here. It made the move right to it, and then it died. And we're right back down here again. Once again, we have such great clarity. I don't know why. I stretch. I did arms yesterday and I'm hurting. I don't know why some people insist on making this harder than it has to be. If you don't have a stock like SITE that's so clear to play off of, where the risk is so evident, and you can accept the risk early on and be like, I'm risking 4 or 5%, I'm okay with that. And you can have good confidence and good mental analysis, and you have good technical analysis. This is a 5-piece puzzle. 5-piece puzzle. Some folks you watch do 50-piece puzzles, and they have the same exact outcome. Why make this harder than it has to be? Sight is so easy to read. This is a beautiful trend line. Again, by being a bit aggressive with it, sure. I think it's fair to say that sight should be down here. Okay, but we're still there. We're still right in it. So again, a full move. Not claiming this is going to happen, but a full move. 15%, 16%. You're risking about 3 to 4. It's a 4 to 1, 5 to 1 kind of setup. Easily at worst, a 2 to 1. Easily a 3 to 1. If we break above this resistance and we show some life, we kind of muddle around here for a little bit. That's cool. Then we take off again. SITE, even if the fundamentals make no sense, even if the mental analysis you have is weak, SITE is so easy to read. That's why I love it. It's such a great example. I wanted to bring it up again today. Let's check the indicators. I already know the 200s right there. Oh, God, it's so good. So SITE, this is an example of what I don't like to see with the 200 sometimes. See how FOXA, it's kind of its own entity. The 200's like, fuck you, I don't really care. SITE, they're in tandem. So again, it's not a bad thing, but again, it does kind of take away from me a little bit. Like, is it really the trend line doing it or the 200? But again, it's still very much there. Look at this convergence. Oh, geez, oh Pete, Batman. Trend line, support, 200 EMA line, POC pulling it up. That's 4 things technically right there. You can see the 50 is what's stopping it. You get a 50 crossover, big fella, and you live. Sheesh. What happens when that happens? Race, races, big ol' race. Ooh, after the race, did a dash. That's going to be great. So SIT, you break that 50, put an alert for that. For sure, put an alert for that. Put a crosses 50, do that. That'll be delicious. That'll be a great play. RSI, it's low. Stock was negative 40, curling north. Bulls low, bears meh. SITE minus the vortex being not where you wanted it, but it was where you wanted it a week ago when I called it. SITE, a complete snack, even if you don't play it. Watch how it goes, watch how it develops. It's such a great beginner play. I love it. It's a great look. And there you guys have it. Don't. So that is in fact 7 great plays for tomorrow. Tomorrow is in fact Wednesday. We didn't have any trading on Monday, so we're almost done with the week, which is sad. I really enjoy Mondays. Have a good rest of your Tuesday. Hope you had a good Memorial Day. We'll see you guys tomorrow. Again, if this information is useful, if you are confused, you're like, the hell is this guy talking about? That's good. You're supposed to be somewhere with someone who actually tries to teach you and shows you new things. Even takes you 4, 5, 6, 7, 135 episodes is what I have so far. To get it down, it makes you a better trader. Otherwise, get out of here. I don't want you anyways. Gross. You don't want to subscribe. Get out of here, nerd. No, I don't know why you waste 35 minutes and not subscribe in the first place, but it's okay. Have a good rest of your Tuesday. We'll see you guys tomorrow for another episode. Thanks.